What's up? What's up? What's up, everyone? How you guys doing? I am so late. I've been tied up. It's Monday. Mondays are always crazy for me. But what's happening? What's happening? What's happening? Get this lighting straight now. Got still moving things around. But listen, my name is Jeremiah Davis. It is Monday Fun Day, and today's topic. All right. So I'm doing a series on the DIY Business Credit Builder. All right. I have a software that you can build your business credit in the most automated fashion possible um, in today's age. Okay. So in the software, we provide you step-by-step instructions, video avatar tutorials um, on how to build your business credit, as well as um, why you need to do these things. Okay. And it's all designed around lender compliance. Lender compliance means what the banks and creditors are looking for when you're applying for a line of credit or you're applying for um, business funding. Okay. So we want you to build your business credit foundation in compliance with lenders and creditors. So, last week I did lender compliance, right? There's 20 items in lender compliance that we want you to complete those things as soon as possible so you can start applying for trade lines. But there's a step in between your lender compliance and applying for trade lines. That step is called optimized reporting. And that's the topic we're going to cover today. Why is it important to optimize your reporting? You need when you're building business credit and you don't have a blueprint. I think this happens all the time. There's so many people out there trying to build their business credit, but they don't have all the pieces to the puzzle. They don't have all the information, right? If you're going to build your business credit, build it from the standpoint that you know what the lenders are looking for. Okay, you know what the lenders are looking for. Okay, so if you didn't see last week's live, go back and watch that because that covers lender compliance. That's step one. Lender compliance is step one. Step two is optimized reporting. Step three is applying for trade lines. Okay, and we got so next week I will be doing the live on applying for trade lines, different type of trade lines. Now we put hundreds of trade lines in the software, not just for vendor accounts, but also uh, uh, secure business credit cards, secure or lines of credit, cash cards, starter vendor cash cards that you can go to a bank and get an account in your business credit in your business's name, and then have that report to 1, 2, 3, 4 of the business credit bureaus. Okay, and this is what I'm talking about today. Optimizing your credit. If you skip this step, you're shooting yourself in the foot. That's the point. If you skip this step, you're shooting yourself in the foot by not setting this up first. Okay, so thank you for watching, and listen. Let me go ahead and jump right into it and get this ball rolling. All righty, share screen. Boom. Okay, optimize reporting. Okay, so this is the dashboard. So when you go to my website, businessfundingnow.com, and you complete a business success scan, you're going to get an email automatically with access to a client dashboard, right? To access to the software. This is the home page. This is the dashboard page. Okay, we have these quick step guides to guide you through, and we have these video avatars that explain the whole process. So there's a lot of information in here. Each week I'm gonna cover every step of this and show you even the bonus sections, the system tutorial, for a full education video library. All these things to help you build your business credit according to what lenders and creditors are looking for. All right. This is the whole concept. Now, this is one of my business. I haven't, went through all the steps, but I can still show you the steps. So like I said, last week we covered step one, lender compliance, right? Now, here's a quick guide to access those, but here's where you actually work the steps. And actually, once you complete the scan, you're gonna get access to step one for free. All right, I don't know how long that offer will last. I do have plans to offer something else for free instead of just lender compliance, okay? Because this is a lot of stuff. This is a lot of stuff. So in the lender compliance, we cover, your business entity, your business location, business phone numbers, 401, website, email, EIN, any business licenses you may get, setting up business banking, agency listings. So you got to have your business listed consistently on every agency. That's from your local Google Maps to any local directories, to the state directory, the Secretary of State, and the national directory. All right, so we provide you the information that you need to make sure of that is done, and then you get started here. Do you need a business plan? Why do you need a business plan? I covered this last week. Business for if you're gonna let me click on it. If you're going to apply for an SBA loan or a business term loan, some lenders might ask you for a business plan. So we provide those resources directly here in the software for you. Does your business have any assets that you can use as collateral? That are they reporting in your business name as a UCC1 filing? Okay, these are different types of things that you want to check for. Okay, owner's credit. Why your credit is important. You got to have your credit together. Okay, all the pieces to the puzzle is about having good, strong business credit, having good, strong personal credit, and good business finances, and as well as the other things in the software. If you follow our directions, we're going to show you how to get a 2, 3, 4, 5 times X on the valuation of your business. So say if you're making $100,000 a year and you don't have these things in place, your business might only be worth, $100,000. But by having these things in place, it could go from $100,000 to $500,000. And that will, if your business is worth that on paper, there's a good chance you get more access to funding as well as be prepared to sell it. Okay, that's one of the steps in the software as well. Is your exit, maximize your earnings. All right, what is it worth? You got an exit plan, how and when to sell. So we're covering that aspect too, but we'll cover that when we get to that section. Okay, then we cover also bank rating. You have to have a low 5 bank rating score to get a lot of funding. All right, we provide you the educational information and the video avatar on every step that explains it. So you can really do this at your own pace, as fast or as slow as you want to. We just charge you a one-time fee and you have lifetime access. Okay. Do you have a CD business loan? Okay, we cover that. All right, and then we also provide you the resources to get those type of CDs. So that's just step one, lender compliance. And if you act right now, go to businessfundingnow.com, complete the free scan, and you're going to get a pre-qualified funding, as well as find the holes in your business credit according to our software and our lender compliance. So you definitely want to take advantage of it. It's free. It's free. It's free. Okay. So today's topic is optimized reporting, right? So why do we need to do this? Why do we need to do this? Optimized reporting. Okay, here we go. I'm just going to play the video avatar. She explains it a lot better than I do.
In this section, we will be taking you through the process of checking your business credit files so that you are sure they are open and you know what is currently in them before you begin the business credit building process.
Short and sweet. Okay, check a business status. Okay, this is your first step right here. All right, so, right, you do this refresher. Let's do that. Right, well, the first time I did it, it came up with some other variations of the same business name. Now you'll have to select which one is yours. It tells me this business has 2 reporting trade lines. I have a business credit score, profile plus available. Okay, so so my business has already got some things on there. All right, that's the software, because all business information is public domain. So whatever's out there associated with my business, my address, okay, the software is checking all public records and pulling that data in. So this is what you get from that free scan. Okay, I'm telling you right now, there's no other software that does this for you. All right, and basically this is your starting point. Step one, choosing your right business that comes up from the scan on this section in optimized reporting. All right, it's going to tell you how many trade lines you have. If you have trade lines and they didn't come up, you might want to go check those business credit bureaus that are supposed to be reporting those trade lines. All right, and then we go to Experian. Okay, now I know that Experian is partnered with most of the states' Secretary of State. So when you file your business with the Secretary of State, that business information, Experian creates a business credit report. Okay, and you automatically have that. And then we provide you the resource. So go get that report right here. Boom. Then you log in and get that report. Okay. If you don't have one, you create an account, right? And now, of course, they're going to want to charge you money for this, but that's their company. They can do what they want to do. But you need to make sure that you have your Experian business credit report established. All right. So, do I have an Experian report? Yes. Is my company, is your company Experian information accurate? Yes. Do you have access to your Experian business report? No, because I ain't paying them for that. Okay. But if you have it, you say yes. Okay. Then we just click save and continue. Now credit safe reports, you have to do a little more extra legwork in setting up your business credit, but we provide the resource right here. Takes you right there, and you will have to fill out the online stuff. You might even have to call them to establish your credit safe business credit report. Okay, and the reason you have to do this is because you don't want to start applying for trade lines, and then if those trade lines are reporting, you have a profile that it can report to. If you don't have a business credit profile with these business credit reporting agencies, then that trade line is not giving you the maximum benefits because you don't have that profile set up. You have to have these profiles. That's why it's step 2 and not step 3. Step 2 is making sure that you got your business credit profiles set up. All right. In the software, we have Experian Business, Credit Safe Report, Equifax Business, and DNB. Okay, so you definitely want to make sure you have all 4 of those set up because these are the most popular ones that business owners and creditors and lenders look at. Now, there are more business credit bureaus out there. Most of the other ones are in niche markets. Specifically, the restaurant or food industry has a business reporting system. If you're in that type of industry, you'll want to make sure you have, because you might be applying for vendors to get products and services you need for your restaurant or food truck, and you want to, and if they check that particular the restaurant business credit reporting agency for your business, it could be the difference between you getting approved and denied for the line of credit for those products and services you need for your restaurant or food truck. All right, and I know food trucks are hot; they've been hot for a long time. I just went to a food truck last week during the hurricane. Y'all know I'm in Florida, in Tampa area, and the hurricane came through, but luckily me and my family are safe, and there was not any damage to any of our properties. We're just continuing to always, pray for those in the Fort Myers area and other hard-hitting areas, as well as in the Caribbean, Cuba, I think Dominican got hit as well, but I digress. Anyway, so make sure that you're going to go step by step, right? Equifax is next. Boom. We'll provide you the resource right here. DNB, boom, right here. It tells you right here to go ahead and get signed up. Apply for your DNB number. If you don't have one, we're giving you everything you need at your fingertips. Let me go back. I'm gonna go back. I'm gonna play some of the video avatars.
Experian is the credit reporting agency most used by credit card providers and business loan providers. If your business is currently listed with Experian, you should purchase a copy of your report to be able to check it for accuracy. If your business is not listed with Experian, we will address that in the building credit section.
Okay. Equifax or Credit Safe.
Credit Safe is the largest business credit reporting agency in Europe, and it's gaining ground in the United States. Credit Safe is largely used by landlords, utility companies, and service companies such as internet providers. It is important to have an open Credit Safe file and make sure the information about your business is accurate.
See, each of these are very short and simple, as well as providing the resource to establish these business credit profiles for your business. Okay, now we're at Equifax.
Equifax business credit reports are primarily used by banks. Opening your Equifax file requires that credit providers begin reporting their payment histories to them. This will happen on the first reporting cycle once you are doing business with credit providers that report to Equifax. Run a search to determine if your Equifax file is open, and if it is, you should sign up for a monitoring package so you can watch your business credit building progress and check your report for accuracy.
D&B. It's all very short and sweet.
There's a lot of misinformation about the importance of Dun & Bradstreet and their Paydex score. Dun & Bradstreet credit reports are almost exclusively used by businesses offering credit terms to other businesses. These are mostly net 30 and revolving term vendors. In the business credit building section, you will be establishing credit lines with vendors that report to Dun & Bradstreet, which will open your file and create your DUNS number.
Okay, business credit scores. Let's talk about it. Business credit scores. Okay, here we go. Here's business credit scores. You select this. If you have business credit scores, you know what their scores are. You can add them to the scan. Okay, here's some information about the Experian Intelligence score, about Equifax business credit score risk. You can view samples here. Click on it. Brings up the PDF, and we're going to teach you how to use these. How do you read a business credit score? This is a sample of Equifax commercial business credit report. Okay. And do you have one? You need to have one. You need to have it set up correctly. Okay. And then you need to understand it as well. That's why it's here. All right. You need to know just as much about your business credit and your business finances as anybody. So when you go to apply for a loan or a line of credit, if you want a large line of credit, you're going to have these things in order. Okay, so we're trying to help you as much as possible here. D&B on your Paydex score. And boom.
For you to build strong business credit scores, it is important to know how each agency generates those scores. Here, we detail the business credit scoring methods and how to build those scores to your advantage.
There you go. Now, the second section is owner's credit. Under owner's credit, okay, you can pull your Experian, MyFICO, a list of banks and credit unions. Okay, FICO score informational here. Now, because why is your personal credit? Because a lot of tier 3 and tier 4 trade lines, if you haven't been in business long enough, are going to require a PG. And if you got bad personal credit, that's going to hinder you from getting those tier 3 and 4 type of trade lines. Okay, let me go ahead and play the video avatar.
Business lenders look at a borrower from a much different viewpoint than consumer lenders. With consumer lenders, credit decisions are mostly about personal credit scores. If you have a 720 or above, you are most likely approved. Consumer lenders are primarily personal credit score driven, while business lender credit decisions are much more about what is in the business owner's credit report. When applying for a small business loan, most small business lenders are looking at the factors that are common to higher risk borrowers, and therefore higher risk of default business loans. Business lenders are far more likely to look at and read the personal credit reports of their small business borrowers rather than simply rely on a personal credit score for their approval decision. As a small business owner, you need to look at your personal credit reports the same way business lenders do so that you can optimize your reports before you apply.
Right. So when you're applying for cash, whether a personal loan or business loan, your personal credit score is going to determine if you're going to get approved or not. If you don't have a 680 or higher, you're most likely are going to get denied for that business loan. All right, banks have not changed. There is corporate-only financing available if your business credit meets the criteria, which we have in the software. They want to make sure you have at least 10 reporting trade lines. Out of those 10 trade lines, 3 need to be revolving, 2 need to be installments, and all credit usage needs to be under 45%, as well as overall DTI needs to be under 40 to 45%. Obviously, the lower the better. You also need to make sure that you've paid all your vendors at least 10 days before the payment is due, and as well as don't have more than 3 to 4 inquiries. 3 inquiries in 90 days, 4 in 6 months is my general rule of thumb, is not to have more than 4 inquiries in 6 months. Okay. And then, like I said, your FICO 8 score of a minimum for a lot of loan products is a 680, but obviously a 700 or 720 is better, and so on, as well as your personal or business source of income. At a minimum, you need $50,000 annual income for personal loans. If it's a business loan, it needs to be over $100,000 annual, and basically more than $10,000 a month in business revenue. Okay, you cannot borrow more money than you can afford. Simple as that. Okay, they're checking your business finances, they're checking your personal credit, they're going to check your income, your tax returns, all these things. And if you are making over $100,000 in your business and you're writing off $100,000 in your business, you're going to get denied. Okay, you're going to get denied because you have no extra capital to pay these loans or these lines of credit. Okay, primary loans, not so much lines of credit, but if you're writing off everything, your business is making no profit. All right, they're not in the business of loaning money to businesses that don't make no money. Okay, talk to any of your tax professionals about that. All right, now we keep going here. Now we've got FICO and business loans. Okay, now we provide you with the information here that why is your credit score important? All right, let's go ahead and play the video, Avatar.
The FICO Small Business Scoring Service is a business credit score that few, if any, business owners have heard about or know how it's calculated. It's mostly used by SBA lenders so that they can make approval decisions faster, maybe in a matter of hours rather than weeks, as can be the case with SBA loans. For small business lenders, it's all about your degree of risk of default. Will they see your business as being very low, moderate, or high? Just like the other business credit scores, a history of making your business credit trade line payments on time or early will help optimize this FICO business score. This score is different from the other business credit scores because it is calculated by blending the personal credit of the business owners and the business credit history. Your business can have a very positive business credit history, but at the same time, if the business owners have low personal FICO scores, those will drag down your business FICO score. For the most part, if the personal FICO scores of anyone owning 20% or more of the business are 720 and above, then you are in favorable standing and considered as having a low personal risk, and therefore your personal credit scores are adding to your business FICO score rather than taking away from it.
Did you guys catch that? It's a mix. It's a mix for some loan types that have good personal credit and good business credit, and they have a score. It's called SSBS score, where they are combining your business and personal credit to see if you're fundable. And the SBA lenders look at that particular score when providing an SBA loan. Okay, so now with some SBA loan types, you can have a 640, all right, and very moderate business credit or none at all. It just depends on the type of SBA loan that you're applying for, all right? But obviously, this is information that you need to look into and understand before you apply. That's the whole concept, is having all the information here available to you so you know that you're going to get approved before you apply. You know that you're going to get approved before you apply, okay? So we definitely want to take a look at that. All right, types of personal debt. Why is this important? Okay.
The central theme of this system is to have your business be seen as having a low or very low risk of default. As a startup business or a business that has not paid very close attention to the details covered in the system, then most likely your business, and maybe you personally, are seen as having a high risk of default for a business loan. Unlike consumer lending, where the lenders rely very heavily on the FICO score alone, business lenders very much care and look at the type of debt that the business owners are personally carrying. The single largest weighted factor in business lending credit approvals is how the business owners have handled their revolving debt. What are the debt to limit ratios? How fast has that debt been run up? Revolving debt is the most important type of personal debt as far as business lenders are concerned. This type of debt most closely reflects how you will make payments on your business loans. Revolving debt is the type of debt that is most likely the first to be defaulted on because, for the most part, it is unsecured debt or at least not viewed as critical to everyday living. Business lenders will want to see good payment histories across all types of personal debt.
Okay. Debt ratio and limits. Okay. Same scenario. Business lending maximum revolving debt to limit. Click here to get a 3-bureau report. All right.
In lending, you hear a lot about the debt to income ratio. This is mostly used in mortgage lending. It is calculated by adding up all of your monthly liabilities, the car payment, credit card payments, student loan payments, etc., and dividing that by your gross monthly income. If it falls under 43%, you qualify for a mortgage. Debt to income ratios will be looked at by many business lenders, but mostly just to watch for you being over leveraged and having too much existing debt versus the income to support it. Another important ratio is your debt to limit ratio. This is calculated by totaling all of your existing revolving debt account balances, credit cards, credit lines, and home equity loans, and dividing that by the total of all your existing available maximum limits. For most business lenders, the maximum debt to limit for revolving accounts is 45% to gain approvals. Anything over 45% is typically considered to be over leveraged and makes you seen as having a higher risk of default. To be considered as a very low risk of default, business owners should have their debt to limit ratios at no more than 19% if the goal is to optimize the approval amounts. Business lenders will also look at how fast the existing debt of the business owners takes place. Did it increase greatly over the last 60 or 90 days? To a lender, a sudden debt increase is a cause for concern and an increase in the risk of default.
There you go. Inquiries and identity. Same thing.
In the 6 months leading up to seeking business financing, it is very important to minimize the number of personal credit inquiries of the business owners. The optimal is to have no more than 4 personal credit inquiries of any kind within the prior 6 months. Specifically, there should be no more than 2 that could be viewed as revolving credit inquiries. Business lending and consumer lending differ greatly in one significant way. Consumer loans report nearly immediately to the credit agencies whether they are used or not. Business loans and credit lines will only report when accessed or used. This means that when business lenders see credit inquiries from known business lending organizations, they have no way of knowing if the application was approved or declined or what amount may have been approved. Therefore, if they see 4 or 5 of these types of inquiries within the prior 6 months, they will assume those prior applications have been approved. This is the reason that business lenders will wait 6 months before considering your business loan application when they see these prior credit inquiries in front of their application.
All right. And then using credit partners. Okay. I've done some of this funding for credit partners. I don't recommend it, but if you are in business and you have a credit partner, or you're going to need a credit partner to secure that type of funding, depends on the type of funding. In some business circles, then that person that's going to help you as a credit partner will need to be on the articles of corporation as a member or part owner, and typically they need to have 20% ownership. Now, if this person is someone that you are familiar with, that's a family member or close friend, what have you, that's all great, but you have to work out those details All right. If you don't need a credit partner, I wouldn't use a credit partner. But if it push comes to shove and it's absolutely necessary, there is a protocol for that. All right. I'm going to play the video avatar.
A credit partnership brings together a business owner with a partner who has good credit. A good credit partner is someone who is willing to use their good credit to obtain financing for the business venture. In most cases, this type of arrangement works well to obtain unsecured financing for the small business. The credit partner is typically a friend, family member, or someone who believes in the success of your business plan. The credit partner is made a part owner of the business, and the proper paperwork is done to amend the entity documentation so that the credit partner's good personal credit can be used to obtain business financing. There are many creative ways to structure the credit partner agreement. You should consult with an attorney and a tax consultant to make sure the maximum protection is in place for both parties, as well as the maximum tax benefits.
Okay. So this is step two. This is all we're covering today is optimize your reporting. So we went over the business credit and the personal credit. So why? Why? Because lenders are looking at this stuff. All right. I say this 100 times a day, it seems like. You got to have all the pieces to the puzzle to maximize all your options for business credit building, securing business credit lines, as well as accessing more funding, business funding options. Okay. If you just got good business credit and no business finances, not personal credit, you're limited in your business funding options and business lines of credit. If you have two pieces, say you have good business finances and good business credit, but poor personal credit, you're limiting yourself to those business credit options and business loan options. Okay. If you have all three, right? And let me just give you some tips about business funding or corporate funding only is you're required to have, like I said, good personal credit, good business credit, and good business finances. Typically, the business needs to make over $100,000 a year. All right, be in business for 2 years and have 2 years of business tax returns. Okay, those are the bare minimums for going in. Now, if the business has assets, well, anything can be assets. Cash flow is an asset, while property is an asset. Equipment is an asset. Retirement funds are an asset. Anything that is of value, the business can use as collateral. Now, you got to be willing, if you're going to use something as collateral, you're looking at approximately 50% loan to value. On a good day, up to 70%. But just keep in mind, if you got a $100,000 piece of equipment, they're going to only probably loan you up to 50% of the value of that equipment. All right. And if you miss a payment, you could lose that piece of equipment. Okay. So those are just some little tidbits when you're applying. And if you're going to use a credit partner, make sure you have all your documentation in order, because I've seen this go sideways. I've seen partners break up over things like this. And it may sometimes businesses go out of business because of the misunderstanding or not having all the legalese in the documentation properly, I's dotted and T's crossed, and now not only the friendship or the relationship is damaged beyond repair, and the business is suffering. So ideally, get your personal credit together, get your business credit together, and get your business finances together to maximize your reporting and your accessibility to business credit and funding. All right. So let's see if we have any questions. Anybody out there got any questions about building business credit? All right. Like I said, right now, if you go to businessfundingnow.com, click on access the free report, the free scan. It's going to give you a pre-qualified funding analysis, and you'll get that email. It's the questionnaire takes less than 3 minutes to complete, and you're going to get you're pre-approved for the 20 different business loan types we offer in the software, and you're going to get a report of where your business credit is. Okay, and then you're going to get access to the client portal and access to step 1 of lender compliance, where you can start working on that And then if you want to move on past that, you'll have to become a paying client. But I'm running a special, right? I normally charge $6.97 for Business Credit Builder DIY, automated DIY version. So you can do this all on your own. Just follow the steps in the software. Of course, we do offer support, email and phone support for those clients. But for the most part, we provide you all the resources and the training and the information in the software. Now, if you can use the discount code DIY200, DIY200, and it will take off $200. So now you're getting the software to build your business credit as a one-time cost, and there's no additional cost in the software. If you have to go out get your business credit reports or other things like that, applying for trade lines, using those trade lines to build your business credit, that's your additional cost, as well as excuse me, as well as any other related business expenses while you're working on building your business credit. Okay, those are third-party companies that do charge for their services or products, so you don't have to pay them. But this is a roadmap of success in building a business credit, accessing more lines of credit, and accessing more funding options for your business. All right, if you're a startup, it's a good time to get your business credit going when you start your business, because you're going to need it. You're going to need business credit as you're building your business. You want to have access to those types of lines of credit, as well as other types of funding as you build your business, so you don't have to use your operating capital. That's the whole concept. Build your business credit so you don't have to use your operating capital. Get access to business funding so you don't have to use your operating capital. The money that's coming in to the business, your business revenue, so you can keep that money in your pocket and pay these things back over time instead of paying it all off using your cash flow. Okay, that's the whole purpose of business credit, is being able to leverage credit without using your revenue or your business income, and you're making this hamster on a wheel type thing, trying to build your business, but you can't only reach so far because your personal credit isn't designed to build your business off of. Your personal credit is not designed to build a Walmart or build a major corporation, access to millions of dollars in credit and funding. You need to build your business credit and stop listening to people who haven't done it, okay, or giving you half truths. If they're telling you that you can get $250,000 on business credit EIN without your personal credit being good, they're lying to you. All right, call any bank. Don't believe me? Do your own research. Call any bank. So that's why we built the software around lender compliance. We built the software around lender compliance. We want the lenders to say yes to you. We want the creditors to say yes to you, so you can have access to these lines of credit and these funding options. All right. If I don't have any questions about business credit, if not, here, let me go ahead. I'm going to put the discount code in the comments. It's DIY200. Boom. Then I'm also going to include my appointment link. I'm just going to include the scan, access to the scan, so you can get your free report. Okay. This free scan is going to give you access to the client portal and step 1. All right, you're going to get access to the client portal and step 1 of lender compliance to build your business credit for free. Okay. And then let me go ahead and give you appointment link if you want to make an appointment with me, so you can ask any questions if you need be. Okay. Appointment link is on the contact us page. Okay, I have a DIY automated business credit building software. All right, And it's normally one-time cost $697. A discount code of DIY 200 takes $200 off, so you're getting a lifetime access for $497 to build your business credit. We got hundreds of vendors in there. You can search the vendor list by category of your industry, and we give you the qualifications and requirements to apply for those. So, and who they report to, which credit bureaus they report to, as well as the qualifications and requirements for the lines of credit before you apply. Okay, before you apply. That means that you can apply for 10 different trade lines day one. Once you get your lending compliance items done and you got your optimized reporting done, building your business credit profiles with the good business credit bureaus, and then you start applying for those trade lines. That's step 3. All right, you can apply for 10 of them. And the reason we want you to apply for 10 of them, you have to use them for 3 consecutive months, purchases and payments. And then those 10 trade lines should be reporting to the 4 different business credit bureaus that you want to set up your profile with. What that does is open up the doors to more funding options and lines of credit. More funding options and lines of credit. When you have 10 reporting trade lines to your business credit, everybody takes you more seriously as far as lending and lines of credit. Okay, so if you if you have all the other ducks in a row, you can apply for corporate only financing and corporate only lines of credit. Now, there are a lot of lines of credit you can apply for that will not require a PG, but the higher the dollar amount, the more risk there is, the more risk and the more conditions they're going to have. Okay, they're not just giving you $250,000 when you don't have no money in your business account. All right, if somebody come to you, ask you for $250,000 saying you ain't got no money, you're going to give it to them? I didn't think so. I'm not, and the bank isn't either. All right. I want to thank you guys for watching. Please schedule an appointment. Please follow me on YouTube, Facebook. Get these updates, notifications when I go live. Monday is Monday Fun Day. I'm always giving out funding tips and business credit tips on this channel. And on Friday, I do Black Label training, Black Label CRM. If you're a business owner and you have big other business owner clients, B2B clients, and they need business credit and business funding, Black Label software, Black Label CRM is a software for you. It's a white label software that you can use to do funding as well as be a business credit provider to your clients. My name is Jeremiah Davis. I am the funding coach. Peace.